Hello and welcome to another update video about gold. So gold looks really good, continues to look good, and it is sort of the best increase or price increase we've had in a long time. And the difference to the previous price increases we've had here in the recent weeks and months since we started this decline and since we have come down in this channel, the difference is that we have finally broken out of the channel already, as indicated in the last video. I am currently assuming the low for gold is in. We came into my, let's say, medium term, long term reversal accumulation area, and we came into that area 1, 2, 3 times. Anybody who's trading this had several weeks time to accumulate here or to buy or whatever, to go long. The last smaller long entry position was here, formulated on the 8th of November, and since then we have moved up nice 7%, which for gold is quite good. I had a few questions, also by email about, how high will this wave one go? And this is something that is extremely difficult to say due to the price structure of this one. Because I think a lot of people are planning or thinking about taking maybe profits or something. Now, that is one of the biggest mistakes many people make, to take profits too early. Now, of course, partial profits along the way are never a mistake. And to be honest, we can see already here on the 4-hour chart a bearish divergence on the chart. So the RSI is already coming down. The momentum is decreasing. The price is still moving higher. Higher highs on the price chart, lower highs on the RSI. That carefully indicates that this is getting exhausted here at some point. But of course, it can push higher. So for me, what I would do, would possibly set a stop loss below the most recent swing low here at 1756, which means that if you really entered here or even in the larger area, so you should really in any case be in profit, then if the price comes down here in this wave 2, you should be able to get stopped out in profit, right? So because I cannot tell you how long this definitely will go, but there is something else that you can use. I mean, I think it is going to get exhausted soon. We take a look at a few levels, but you can also draw a trend line here, very clear trend line, and they are very, very reliable usually. If you break below this trend line, that's another warning sign that this wave 1 is finished. Now we are now approaching resistance. Here the 1790 level is resistance, but the more relevant one for me is 1825. I mean, I wouldn't even rule out that we go up to 1825, but I think that should be it. Not generally in the uptrend, but for this wave 1. I think either we come down here now or we push to 1825 and come down then. Anything higher would really surprise me and would just even more indicate that the low is already in. I did formulate in the previous video a possible target area to give you a guide here for a wave 2 correction, but I have to adjust this now because we moved a bit higher. So that's sort of located between the 50% fib level and the 78.6% Fibonacci retracement level between 1706 and 1657. Generally, what we need to see is, yes, we have 5 waves up. This is looking really good. So my assumption at the moment is that the low is in, but it is not really until we find support in wave 2. Yeah, because this is the area it needs to hold in the retracement, and until it breaks above the wave 1 high, that we can confirm that a low has been in or is in. Yeah. Until then, things are still uncertain, but of course there is uncertainty in these markets, and for me personally, the next entry area will be the wave 2, and a warning sign that things are changing will be a break of the trend line or a drop below that 1757 level. If you want to set a stop loss, that's up to you, but overall I think it's starting to look good. And this move up, as I already showed you in previous videos, is for me part of the wave 5 of wave 1, which means there should be one larger trend to the upside still to come, to finish off this larger cycle. Now that can take years to play out, but it should go sort of in the region around 2,500, 2,600 US dollars, because this would mark the end of a cycle. In whatever gold is doing, it is very, very important that it's not dropping below the $1,600 level again. If it does that, dropping below that level, it will indicate that something else is going on here, and that we are going to go into a much deeper correction, because the $1,600 level is a lower support of my yellow reversal area. Going below that level would not indicate that we are in a wave 4, as I have labeled this, but actually in a wave 2. Yeah, it would basically indicate that this wave 4 was actually here, this wave 5 was finished here, and this wave 5 then as well, which means the larger cycle is already done. This would be actually a higher degree wave 1, and we would then come down in wave 2. Now that would mean that we might actually see a retest of the $1,000 level or even lower. So quite a strong setback. Now I don't really see that yet. I don't see that primarily. All you need to know is ideally the price stays above $1,600, and ideally it now continues to push higher, will only come down in this wave 2 correction, which would be another possible accumulation phase. Okay, and that's my update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.